more regulation help solve the problem at this point, or is it too little, too late? A difference of opinion from John Carney at Business Insider. We also have Iswar Prashad at Brookings Institute joining us right now. John, you know, speculators get blamed for a whole lot of things, but it's like, rather than blame the bad driver who crashed the car into the tree, blame the guy who bought insurance on that driver. That's what this argument feels like.
Right. It's absolutely crazy. First of all, right now, Greek owes its entire ability to stay out of default on its debts to speculators. Who else is buying Greek debt except for speculators?
That's a great point. Iswar, what do you think?
Now, let's get real here. The root problem is that the Greek economy is running a budget deficit of 12.5% of GDP and has a debt level of 110% of GDP. So I think it doesn't make sense to blame the speculators, but the speculators do have two important effects. First of all, they do bring the day of reckoning forward. The day of reckoning had to come, but they do make sure it comes much earlier. And second, they take away the option of adjusting slowly. They make the economy adjust that much faster. So, of course, the pain is going to be much greater. But to blame the speculators for the root causes, I think, is simply incorrect.
Iswar, why is it such a bad thing that it brings the day of reckoning forward? When you bring the day of reckoning forward, it's painful, but it's often cheaper instead of lending and extending.
It's absolutely correct that this prevents a problem from festering further. In fact, if the speculators had not caused this problem, if in fact they did, you could have had the Greece continuing to build up even more debt, and this would have made the problem even worse when the day of reckoning did come. But the issue is whether they have accelerated the process and added fuel to the fire, because this was a problem that perhaps may have become a little smaller if the economy had started recovering.
I think that what happened is, rather than adding fuel to the fire, the speculators in this case helped put out the fire. The ancient Greeks had a word, akrasia, which meant out of control. And the Greek government spending was out of control.
Yeah, but they put out the fire by soaking it with gasoline. I mean, we just heard Iswar go over some of the bad things happen, but don't the swaps also, John, blow out the spread so much that the new debt ends up having a higher interest rate just as a result of what the swaps did? It's the tail wagging dog, John.
I actually think it's working the opposite way. Without the swaps in place, people would be afraid to take on this debt. The swaps actually allow people to hedge their positions a little bit. And it
also liquidity, but what about the cost of that debt, John?
It also indicates to people what the actual risk there is. I think the spreads would be even more volatile without the swaps.
So Greece just went to market. They had to pay a huge spread over everybody else. If the swap market didn't exist, do you think that spread would have been any smaller, or would they still have to pay up so much?
They would have to pay a fairly high premium because they are getting a backing from the Eurozone, and ultimately we know that Greece is not going to be allowed to go down the tubes, and that in a sense is creating some risk. But their cost of their debt was no different.
You think their cost of debt was no different regardless of whether swaps existed?
Might it be cheaper because of swaps?
I think at this level of premium, it's largely the longer-term institutional investors who are going in. So I don't think it's the speculators who are buying into this debt at this rate, although the presence of credit default swaps certainly allows them to hedge at least part of their positions. But given how much risk is being priced into the Greek bonds right now, I think it's a fair bet that these investors don't need any further backing.
Yeah, just to get in there and try and argue the opposite side a little bit. John, I mean, there are a lot of cases where you see traders that are out there trading credit default swaps create false alarms. I mean, we saw that with a lot of the banks that were maybe not necessarily in trouble or weren't in as bad a trouble as the other ones that went down, where you know, speculators in credit default swap market went in and started really circling and making a problem that maybe wasn't there or wasn't that bad a whole lot worse.
Melissa, it can happen that you can get a temporary blip, but that gets arbitraged away very quickly, because if these swaps are selling for, if credit default swaps are selling for enormous amounts, people pile into that market just like they do any other overpriced market.
And John, we're trying to solve a different kind of problem. One of the reasons why it became so debilitating during the financial crisis is the ratings agencies would see the credit default swaps, do the downgrades, which then led to the selling of the debt by the pension funds, et cetera, et cetera. You know how you solve this problem? You don't get rid of the credit default swap market. You just get rid of all these stupid laws that legislate profitability to the ratings agencies and say, you know what, it doesn't matter what the ratings agencies say.
Absolutely. We need to take the rating agencies out of the game because they've proven themselves incapable of doing it. And a lot of that is because they have these locked-in legal oligopolies, and that makes it impossible for them to do their job correctly. The ratings agencies is another story, but it's a disaster as well.
Yeah. Problem solved.
The reason why what Mr. Papandreou says resonates is that credit default swaps do make a bad problem much worse at vulnerable times. But ultimately, you have to deal with the source of vulnerability. But in terms of regulation, certainly more transparency, having more of these instruments traded on open exchanges can prevent these from making a bad problem even worse. But I don't think that is the root of the problem, really. Credit default swaps are not what caused the Greek economy to go into crisis.
We're at a scary amount of agreement here, I think, because
I know that's why
really
I tried to get on the other side for a second there, but wasn't very successful. Yeah, maybe the Prime Minister should focus on reducing debt or spending a little bit instead. Guys, thanks so much for joining us. It was a fun discussion.